Good day, guys. Today we are going to learn something simple, so simple. As a continuation to the market structure, we're first discussing type of trend or trendy market that we have. We had two types of trendy market, or the downtrend and the uptrend. We also have the third one, which is the sideways movement of market. Now, we need to be able to identify some features that will signify that market is on uptrend, and then that also signifies the market is on a downtrend. And what do we also identify? That will tell us that market is on the sideways, or it is what, consolidating. So today we're come to actually learn some simple ways you can still identify or spot an uptrend and also what, a downtrend. Now let's jump into the chart and then we start. When market is on an uptrend, we say it is going up, bullish. It is in a bullish form, or the bulls are in control of the market. And when we say market is what, is in a downtrend, that means market is what, is in a bearish movement. That is, the bears are in charge of the market or are in control of the market. So how do we identify a bullish market? Now, for a bullish market, that means market must be forming something we call what, higher lows and higher highs. Higher lows, higher highs. So when we see or we spot higher highs and higher lows in the market, then we say that market is in an uptrend. Good. Now let's take this. Market is from this place, and then we saw this move. Can you see that? So market is what, doing something like this. Okay, so now if you see market doing this, then we say that market is in what, in an uptrend. It is what, forming higher highs and higher lows. So we have our first higher low here. All right, so when we have something of this sort, we say market is what is forming higher highs and higher lows. Good. Now, why do we say this is a higher high and this is a higher low? We are going up. We are in an up trend. Okay, so we see this high here forming, which is higher than this one over here. This high here is formed higher than this high here, and then this is a low. But because we are in an uptrend, we say what it is a higher low. Okay, this higher low, also higher low, higher low, higher low, higher low, higher low. Good. Now this one too is higher high because it's higher than the previous high. So that way. So when you see market doing this, then you say that market is on what? Market is on an uptrend. Because the current high will surely break the previous high. And as soon as that is done, it means market is just moving in higher highs. Now, when a low, a higher low is broken, just like what happened over here. That's as what happened over here. This is not a higher low, and this is also not what? A higher low, and this is also not what? A higher high. This is not a higher low because the high here couldn't break the previous high. So it is not what? A higher low, and this is also not what? A higher high. Look at this one too. This one, the high, this high wasn't able to break the previous high. So we don't call this what? A higher high, but we call it what? A high. So this is a high. This is a high. And this is a low. This is a low. Okay. They are also lows, but they are not. There could be higher lows. Yeah, you can still call them higher lows, but this one is not a higher high because it couldn't break this high here, so it's still a high. And this is also what? A low, but not this higher low. Good. So this is how we identify a trending or an uptrend market. Now let's come here. This is a higher low here. Now this higher low has been taken or has been broken by this. Okay, there are sometimes you have this higher high here coming down to break here, and sometimes you this high will not be able to form what? To create a higher high before to come down to break the low, the higher low here. So as soon as we have this higher low taken, market will start forming what? Lower lows and lower highs. Now this is going to be like this. To be forming lower highs. Let me do it well. Let me okay, something like this. Good. Now that this low here is lower than this higher low here, we call it what? Lower low. We call it a lower low because the low here is lower than this higher low here or low here. So we call it what? A lower low, or even this low. But we're waiting to break this lower high, higher low before we can say market is now what? Changing. So when market has broken that higher low, then we say what? There's a break of what? Structure. Break of what? Structure. BOS. Go what? BOS. call it what? BOS, because we have broken what? The market structure. We are no more on an uptrend. We are now what? On a downtrend. So market is now trying to form what? Higher lows. Sorry. Lower low has been formed here because it's lower than this low. So then it will form a high, lower high. Then the next low must be lower than the previous low here. They also call it what? A lower low. Like that. Okay. Then this low here shouldn't go and break this lower high here. We call it what? Also lower high. Because it's lower than the previous high. So like that. Lower low, lower high, lower low, lower high. Okay. Like that. So until we have something like this again. So this is a cycle. It continues that way. It continues that way. Good. Now what do we see? Let me write this one down for you. So we have here what? Lower high. Alright, so this is it. Now the movement here is called what? An uptrend. So we're in an uptrend market. That's an uptrend market. And then that over here is called what? A downtrend. Downtrend market. Okay, downtrend market. All right. So this is an uptrend and then downtrend. This is how they move. That is why when a market is about to reverse, okay, we have some patterns, something like W and then the M pattern or head and shoulder patterns. Good. Because the higher low must be broken. And then market coming down, either it will do like this to break it, has given us a pattern. Can we see this pattern? Some call it what? M pattern. When it is equal, some call it what? Double bottom, a double top pattern. Patterns, okay, or double top. That's how it goes. Okay. Now let's move to the third type of what? Market structure. Now, when market is forming equal highs and equal lows, okay, when we have equal highs, equal lows, something like this, market is actually not moving in any direction. It is neither going up nor coming down. It is just at the same place, and then it is forming what? Equal highs, equal lows, okay, something like those kind of things. And this is where manipulations take place a lot. Okay, this is where manipulation takes place a lot. Okay, so you can see the market is neither going up nor coming what? Coming down. So call it what? Equal highs and equal lows. That's what I call the consolidation market. Market is what is consolidating, or it is what it is moving in a sideways. You can see that it's just going sideways. It is not just going up nor coming down. Okay, yes. So it is forming something, it is giving us a support and a resistance. Support at the down here, resistance at the top here. So those who are good at scalping, they will be selling here, then they will buy here. Sell here, buy here. But this is the time market makers actually manipulate, or they take people out a lot. Those who can be impatient, and then some will put their orders here, buy stop. Maybe market is here, so they put their buy stop here, then sell stop here. So that when market comes down, to come and take it and then start selling down. But what would they do? They'll come and then trigger the sell stop, then go up, go also trigger the what? The buy stop. Then it will start moving. So now you are in. You are losing here, you are losing here. So in a consolidating market, what we normally do is we stay aside. We sit on our hands. We don't do anything. No trade until the market finally break it significantly and give you a direction. After doing this, it should give you a nice retest and give you some kind of candlestick patterns or confirmation that will make you believe that okay, market is about to come down or to go up. Then to start from this way. Then this way you start looking for what? Selling opportunities. Start looking for what? Selling opportunities. And if it breaks upward to the same way, you wait for what? If market should go this way, break here, come for retest, and then start what? Forming higher lows, higher highs, higher lows, higher highs. Then you'll be looking for what? For only buying opportunities. Okay, we are only looking for what? Buying opportunities. Good. So this is how we trade a consolidating market. You have to wait for a break, that to the down or to the up side. Then you start looking for what? A selling opportunity or buying opportunity. Now we are going to jump into the live chart and then identify this type of what? Market structure. Okay. Type of what? Market structure. We first discuss the higher highs and higher lows. We went ahead to discuss the lower lows and the lower highs. Okay, so as we can see, it is very clear now. Very, very clear. Good. It's like I never explained here. So when this breaks, to come and retest here, and then to start forming what? Higher highs and higher lows, or to start consolidating here. Anything could happen. Yeah, so let's come to this chart and then try to see if we can identify them. Now let's take this place and see if you can identify the higher highs over here. Okay, this is a bearish downtrend, sorry, a bearish market in general. If you want to consider the higher time frame, this market has been down for a very long time, but then we do have some kind of bullishness in it. So what we identify is we had a low here, then this low formed a high here. Can we see? Then we had another low here, we had a high here, we had a low here, a high here, a low here, another high here, then a low. Okay, this is a high, sorry for that. We had this high, then this one came to what? Break. It came to break that low over here. And what did we have? Market started what? Selling again. Okay, now you can see that some, I did not mark some because they are of equal height. They never took or break the previous high, therefore they are not what? Higher highs. Now if I zoom it well, you can see that this one is not a higher low because its high couldn't break the previous high. That is why this market even came down to break it. So when this one to break here and you are thinking that market is about to go down, then you are lying, because this high here was not higher than the previous one. Okay, so this is the second higher low. Now we can have a lot here. So we had this one too as a higher low. This is very correct because this one is higher than the previous higher high. So we had this, its low is here. Okay, so this is a higher low. Good. With this and this, you see that they are of equal high. Okay, they are of equal high, so consider them as one. So that's it. So this is an example of what? Of an uptrend forming higher highs and higher lows. This one over here. Okay, it's an uptrend, you can see it. So when do we say the uptrend is over? The uptrend becomes over when the previous low, higher low is taken, just like as what we have over here. Okay, you can see that it was taken here. The market started doing something like higher highs and higher lows. Have you seen? So it went, but it was not able to break the previous higher high. This is where most people normally get it wrong. This is the previous what? Higher high. And this high that formed here couldn't break that higher high. Okay, but then it forms a lower low here because it is lower than the previous one. This is a lower low. Sorry, this is a lower low it forms. Okay, then this forms a high here. Then you drop like that. Are we seeing? Then we started having what? Higher low, lower highs and lower low, lower high. Can we see? Like that. Like that. So this one is not. This one couldn't form what? A lower low. That is why this high was taken by this high here. Now, so we don't consider this as what? As a lower high. This one we consider as a lower high because it's what? This one is higher than the previous high here. So we had our higher low here. lower low like that. Can we see how we are coming down like that? So we had this. Now this and this are of the same height. They are of the same height. I think that's why market really went down again. That's why market went down and equity started. I was thinking it was going to go up. Yeah. But I was expecting it to break this one first. This yellow line. And it couldn't break it. So if it had broken it like this, I think that was the initial draw. Yeah, so here they just fake people out. Some people who don't really know much about these higher highs and higher lows, they will be thinking this trade here has really become what? A bullish market. But then it did not, because it did not break the yellow line until it is broken. Okay. Yes, this one of the things I teach in my mentorship programs. There are secrets here. There are secrets. The reason why I wouldn't go for a long buy here is because I consider this with this one as what? As equal high over here, even though it happened to take this one here. But this is not the low or the high I'm looking out for to be taken. This is what I'm looking out to be taken. The yellow line. Yeah. The yellow one there. And I think I even jump it. I did not take it as what? I did not take it rather. Should have taken that one rather. Okay. Something like that. And even if this one is going to be a high cry, it could still be a high, but then I wouldn't see it as the main. Good. So we are likely to have another one like that. Then we'll be going. How is it? Good. So that's what we'll be happy. So this is a current market. So this is a lower low. Sorry. Have we seen? This is a downtrend. This is how market forms during downtrends. Forms higher lows and lower highs and lower lows. Lower highs and lower lows. Now let's go and identify a ranging market or a sideways market. Then we end this here. Some pairs can really go through consolidation for months and some even years. They will consolidate. Okay. There is a short one here, but then it is too short for me. We start from over here. Okay, you can see that market was actually forming what? Equal highs. Can we see that? And this is the manipulation I was talking about. Okay. Have you seen? Before later on it comes to break it downwards. And when you break it, you start looking for what? Selling opportunities, as I explained earlier on. Okay, have you seen? So a lower has formed here. What else do you expect to form? A lower high. Then like that, it continues that way. Okay, continues that way. And that high has formed here. And that lower high. This is even the main. That's it here. Can you see? Like that. Low. Then this and this are equal, so just continue like that. You can. So we are going to have another lower high to this place. And but then to be touching this trend line, then it will come down like that. Okay. I hope. So thank you for watching. If you are looking for the best broker for synthetics, the link is down there. It is in the description. So just kindly click on it and then you register account. If you want to trade synthetic like volatility 75, you want to trade boom and crash and co. Yeah. You can also use the same broker for currency pairs, or what I'm just teaching right now. Alright. Now, if this is the first time of coming to my channel, please kindly subscribe and then you turn on the notification. Anytime I drop a content of this sort, you'll be the first person to be notified. Share the video to your friends who need to learn. Okay. We also discuss with my students. We discuss candlestick formation and candlestick pattern, which is in the video. You can check the playlist and watch them. If you're a beginner, it will help you a lot to understand what or which candlesticks are the best for you to even use. Alright, so stay tuned, more content on your way coming. Bye.